Good afternoon. Welcome to our live webinar exploring opportunities in the Dubai International Financial Centre. My name is Bianca Beck. I am the Middle East Marketing Manager at Sovereign PPG. The session that we have planned for you today is being recorded, and the presentation and recap will be shared with everyone participating today. You are welcome to ask any questions in the chat or Q&A function, and the team will get through as many as we can at the end. We are also launching 2 poll questions, so if you can participate, that would be great, because then it gets us to understand the level of knowledge and what you're looking for and how we can best support you. I'm really pleased to introduce our 2 speakers today. We've got Zana Jablan Musa, who is our Middle East Operations Director, and Matthew Boyd, who is our Business Development Manager, who are both form part of our core DIFC team, who are on the ground every single week. They're actually presenting to you today from the DIFC Academy, so they are actually live on. We are very proud to have received our CSP license in DIFC this year, and the team are about to provide you with a really informative session at a very top level about the opportunities in DIFC. So team, over to you.
Thank you, Bianca, and good afternoon, everyone. Again, thank you for joining us. Before we start, I just want to have a quick note on today's focus. As Bianca said, this session is designed more of an overview and refresher on the DIFC structures. So we'll give you a high level, but still practical overview on key entity types. And we want this to work for everyone, not just people dealing with DIFC day to day, or if you're working in DIFC, but also to those of you who don't have any idea about DIFC, what is actually the benefit of being here. So we won't go into technical details, but we'll give you a strong grasp on the essentials. So I'll pause here and hand over to my colleague Matt, who will start with why DIFC.
Perfect. Good morning, everyone. Thanks for joining. So, as I say, my name is Matt Boyd. I'm part of the BD team here at Sovereign, and obviously stationed here also in DIFC as well. So I will be running through why DIFC, just the first part of this presentation, why you may want to bring your business here or set up your structures in the DIFC. So obviously DIFC is not just a financial free zone. It's obviously called the financial center, but it is a gateway between the East and the West. And it really has a lot of opportunity for the regional talent for people to come over here. It's actually ranked number 2 globally for attracting talent, and number 1 in ease of doing business. And certainly when we set up structures, it is incredibly easy to do. So a lot of people are moving their businesses here, and it's becoming more attractive for those individuals and companies. And also one of the sort of secondary benefits of bringing your business here, certainly if you're a law firm or a financial firm, is you can actually give golden visas to your skilled members. So if you're a law firm, for example, and have a lot of partners or people, sort of executive directors, you can offer them a 10-year golden visa through certain earnings or certain positions they may have, and obviously that is a good thing to bring talent to this region. Rather than the 2-year visa, you actually can get a longer term 10-year visa, so that's quite a attractive proposition. So just moving on to who is here and what kind of people would come to the DIFC. Obviously, it's a financial hub, but it's also a legal hub as well. Many people are moving here because they know that it's such a great space to have and manage money here. Certainly in the family office space, there is a 700 billion wealth under management here in the DIFC. There's a lot of funds being registered here, and obviously a lot of high net worths have their family offices here. So extremely attractive from a planning perspective to set up your family office here in DIFC. There is obviously a lot of legal benefits. Obviously, its main one being that it's in English common law, so it's different than civil law, which is the mainland of the UAE. Has its own court system, so it has DIFC courts. It's regulated through the DFSA. And again, like many free zones, you can have 100% foreign ownership, so you don't have to have any local sponsorship, which is very attractive for those who want to have their business solely owned by themselves. And also it has really good data protection and IP laws, which align with the GDPR principles around the globe. And they brought that here to the UAE. So as you can see, that's quite a busy slide there, but there's quite a lot of legal benefits. So if you want to ring fence assets and have things kind of segregated, and also with virtual assets as well, DIFC is becoming more attractive as a location to have digital assets and your crypto and other such benefits there as well. And in terms of the different structures that we have, I'll just hand over to Zana here for the different types of entities that we can set up in DIFC.
Thanks, Matt. So in a nutshell, we can say that from day one, DIFC has been aligned with international and legal standards and has been upholding this standard throughout their core bodies, like DIFC Authority, who is actually enacting the legislation, DIFC Free Zone, who issues the licenses, Dubai Financial Service Authority, DFSA, who is the financial regulator, and the DIFC courts, who enforces any decisions and can hear disputes. So if we can see, this is the distinct jurisdiction within the Dubai. That's why DIFC is so important, because it's kind of a home away from home. It has everything. It has a whole ecosystem. It operates on its own without dependency on any federal courts, for example. Just to kind of make a bit of a comparison, if some of our participants have dealt with other free zones, for example, other free zones do have their own licensing authority, but they are dependent on the UAE local legislation for enacting those legislations. So they don't have their own authorities for that. And they also depend on the local courts, whether it is Abu Dhabi courts or Dubai courts. They will have to go to the local civil courts. So this is why the DIFC importance is so highlighted since 2004, I think, when they established. And so coming back to the entity types that you can have in DIFC within the common law, again, principles and jurisdiction, we prepared, I think this is something that DIFC as well shares with their partners, a very clear table on structures and services and how they are segregated within DIFC. Because I want to focus on a couple of misconceptions that I've heard throughout my 12 years here from clients, even introducers, is that first one was, if you're in DIFC, do you need a DFSA license? So do you need to be regulated on the highest level? That is not the case. So only if you conduct regulated activities, so if you fall under the category we see here first, which is financial services, banking, capital markets, reinsurance, wealth and asset management, that's the category that you will have to, without any exemption, go also work with DIFC to get license. But on the other hand, there is another misconception that if you are not falling into this category, that actually you don't need the DFSA license. And that's also not fully true. If you are a professional service provider, for example, like we are Sovereign, we have licensed ourselves as corporate service provider. We are not a financial service activity, but as a professional activity, we still need a DFSA license. So we had to work with DFSA to obtain our license. The same would be for the other professional service providers. But there are categories that fall completely outside the DFSA licensing. And I think for this presentation, that will be our core. We will focus on the corporates and family businesses and how those structures that don't need DFSA operate and how they are used for structuring and tax efficiencies. So if we can move to the next one. Thanks. I would say one of the core services when it comes to corporate categories and the simple private limited company incorporation without the need of a financial regulator would be managing offices, holding companies, and proprietary investment activities. Especially managing offices is a very interesting activity that I've seen a lot being used by companies for their internal operations and internal grouping. So they want functions like treasury, HR, IT being managed by a separate entity. And this activity falls really nicely in line with that. And usually we can also combine it with a holding company activity where you can hold the group subsidiaries. These activities are quite straightforward when it comes to also registration process. So I'm not going to go into these details, but I thought it was very important to highlight for everyone that these categories, what are they used for and what is the description when it comes to DIFC. Main focus, I would say, of our presentation would be the SPV, which is the special purpose vehicle, foundation and family office. So DIFC special purpose vehicle is also called prescribed company. DIFC has changed throughout the last recent years, their regime and legislation around this type of structure, and they were 2 years ago, I think they introduced the regime as prescribed company. Now it is marketed more as a special purpose vehicle, but the usage, the features, the requirements are the same. So why would somebody need a special purpose vehicle and why would you choose the DIFC? They have mainly the reduced licensing fees, then flexible registration office. So we all know the office space is one of the key factors that everyone looks for when they come to UAE, because renting offices is not cheap, as well as not buying, especially in the DIFC, these are prime locations. So having that flexibility that you can actually either have a shared space or establish a company via a registered address from a corporate service provider is a benefit. So that means your total incorporation cost goes significantly down. And for this category, you can actually use the registered address of a CSP, but also you have an option if you own a space or own your own office, you can use that office address. The registration itself, and my team's work on registering companies, is fairly straightforward and quick. Everything is digital. So you can have even the initial in-principle approval within 3 days, depending how good your onboarding and KYC is. And that's why, that's, I would say, always our feature with clients, that we are a bit tough at the beginning, but that's why, because we want to prepare a quality application that we put forward and get the minimum timing for approval. And we have a good track record throughout all the registrars in UAE. Also, there is no requirements for attestation. When it comes to mainland and other free zone, usually there is strict requirements that you need to attest your documents up to the UAE embassy and over here, and it is quite costly. Here, only certification is required. Again, we give guidelines on what is a proper certification, but usually it's by a professional individual. So that also is very helpful with getting timelines and also the cost. And one interesting thing as well that a lot of our clients and also introducers are interested in is transfer of domicile. So redomiciliation, the DIFC, is the legislation is equipped to do it in and out. So you can redomicile out of the DIFC, also redomicile into the DIFC. So these are some of the features that I wanted, and when I discussed with the teams, we wanted to highlight. But there is also a qualifying criteria, which I think it's an improvement. And this is within the new legislation that the DIFC did. It's much wider in scope on what of qualifying criteria you need to have. And you need to, there is a route of 4, and you need to only comply with one of those. So not all 4 of those. First criteria would be ownership and control. So an SPV is owned or controlled by a GCC person, a registered person, or an authorized firm. So that means either you hold shareholding, so you are owned, or not just owned, you can be owned, controlled, and that would be enough. Who is a registered person? That is any other firm that is operating within the DIFC. So if it's a registered firm in the DIFC and you already have another company, you are qualified to open an SPV. And authorized person is any firm licensed by the DFSA. So they automatically qualify. Most, I would say, under which criteria, if we ask me, when you analyze your clients in percentages, which criteria is the most that has been used, that's the qualifying purpose or asset holding purpose, where we have a lot of clients registering SPVs to hold GCC assets. So it's been spread, not UAE, it's to GCC, any GCC country. If you own assets in it, it doesn't have to be only real estate. It can be also shares or partnership interests. You qualify to register a DIFC SPV. When it comes to also specific purposes like aviation, marine time, IP, IP is a very interesting one, and a lot of clients like to have separate SPVs for that. I think that's in the diagram. I'm jumping, but yeah, and also there is the fourth category, which is the corporate service provider route. If your corporate service provider accepts that an employee from the CSP acts as a director and handles your AML and compliance for the SPV, that could also be a qualifying criteria. With that criteria, of course, there is a lot of liability and responsibility. So that would be, when it comes to each corporate service provider, internal compliance requirements and risk appetite decision. But it is there as a qualifying purpose, not a very common one, but it can be also tailored, depends on the client. Yeah, I think if we can go on some examples and diagrams and see how SPVs can be used. This diagram shows a very broad DIFC structure. In a very high level, how SPVs can fit within a broad structure. Usually, we have a DIFC topco. That topco can be a holding company, foundation, even a family office. I think the most interesting one that I've been seeing in the last few years is that family offices are on top of foundations, and then they have certain SPVs for either business line or different asset holdings. So in this particular diagram, we have the one SPV holding real estate properties, one intellectual property, and this is a classic one because usually you want to separate your intellectual properties. When it comes to active enterprise, we didn't go into analyzing it, but the difference between an SPV and active enterprise is that active enterprise is an operating company. SPVs are passive holding vehicles and they can't have employees. So you will not be able to get a UAE residency based on the SPV because you don't actually have operations. On an active enterprise, for registering it, you need different criteria and you need to meet the substance. So you have usually an office space and you can have employees. That's why you use usually active enterprises for your trading, for your operating activities. But Matt, I don't know if you want to comment. I think a lot of our clients as well use it much more simply in terms of having one SPV for different purposes.
Yeah, I think, thank you, Zana. I think one of the main things is asset segregation.
Yeah.
So many clients that I speak with that they may have different asset classes. And one example at the moment I'm working on with the clients is he has various shareholdings of UAE and regional businesses. But he's also got quite a large portfolio of real estate that he wants to ultimately own through a corporate structure, but have them segregated for his own personal reasons. Obviously, receiving funds from an audit perspective, it needs now very important to make sure that everything's separated and everything's ring fenced that way from a risk perspective. So it's quite common to have it separated. Yeah. It can make it complicated, but for those people that want to make sure that everything is where it should be as per the wishes, it's very important to have these things segregated, but it's very common.
Yeah. Bianca, I'm not sure, like on the housekeeping at the beginning, I see somebody's holding their hand. I'm quite flexible always when it comes to these things, but I know we had envisioned that the questions and answers come at the end. So I don't know if you want to comment.
Yeah, no, I've asked Simon to just put it in the Q&A section and we'll get to it towards the end.
All right, thank you. And apologies for that because some of you might prefer that we are very interactive at this point, but yeah, let's keep it at the end, and we promise we'll try to be as active as possible at the end of the session. Foundations. One of the, I would say now, the DIFC most strategic tool in asset planning and success and long-term governance that we've seen. I think the number of inquiries, the number of traction we have for foundation recently has been unseen before.
Yeah, I'd say it's probably the last year or so. The foundation model that DIFC has been probably the most recommended and requested kind of setup we get. A lot of people understand that trusts aren't really in the UAE as they are around the world, but this foundation model for UAE residents or GCC residents is very attractive for kind of global asset planning because a foundation can hold international assets as well as local assets here. And it's a really, really powerful tool for people to set up.
And that's a good point to highlight at the beginning, Matt. So the foundation is a separate legal entity.
Yeah.
It's not a trust. Trust is a relationship. So when it comes to civil laws here in the region, it's much more acceptable, even when it comes to holding property. So the DIFC Foundation is, when it comes to Dubai Land Department, for example, they are very familiar with DIFC foundations. DIFC foundations have been here since 2018.
Yeah.
And they have now a track record already. So let's go a little bit why, again, keeping the flow and structure. So as I said, it's a separate entity. It's managed by council members. They are not the owners. So council members, and I always describe them to my clients as a board of directors. So they will manage the foundation and they will make the decision based on the foundation charter. So in your chart, that's why the chart is important, and we can discuss it a little bit in the diagram. But as the man said, asset protection can maintain privacy. I think this is one of the key features, is that the registrars for foundation are private. They are not made public with the DIFC. And so that families and UBOs do have a level of confidentiality and privacy. So that's a very important highlight. There is tax foundations, that foundations are used as well for tax planning and efficiency. There is ways on, I have to just mention here that yes, foundations have to be registered. Every entity that is established in the UAE has to register for corporate tax, but there is ways to have the foundation exempt in a way as a tax transparent person. So that's something that it's also been a topic with many of the panels that I've been on. And then you can maintain the regulatory and filing transparency and that have that clear governance and under the common law in foundations. So who qualifies to set up a foundation, and what are the setup criteria? So you have all the foundation roles. So you have to have at least one founder and 2 council members. These are mandatory. And you have when it comes to foundations, registered address, you can has to be in DIFC. You can have it via your CSP, the same as similar to SPV. So you can have it via the CSP provider or through a shared office, or if you have your own office, you can use that. And when it comes to purpose of the foundation, so foundation is set up for a specific purpose. It can be charitable aims or benefit to benefit named person or classes, right? Here on the purpose, I just want to have, as when there is one misconception as well. We had a couple of clients that we did recommend not to submit applications because we didn't believe they fit the purpose, but they have insisted. Again, we were not their legal advisors, we are corporate service providers. So our job will be to flag those things to you and give you guidance at the beginning. But we had 2 applications returned back because they were too much on the borderline on being charities. So when it comes to charitable aims and purpose, it is intended to be used as so founders' intent should be to use the foundation for philanthropy and objectives using his own private funds. So in strict content of what a charitable aim means, it cannot be any donations. It cannot be for collecting any charity for any charity causes. So it cannot be as a charity. So it has to be either for, let's say, founder is donating for education, his own money, and that's how it's used, or healthcare or some specific scholarships. So that's in this legal context of the DIFC Foundation, that's what a charitable aim means. And fees, yeah, they're very effective setup costs and maintenance when it comes to foundations. Diagrams of how it would look like in practice. Again, you will always have a founder. We had a question, who, it doesn't have to be a natural person, or company can be as well. Founder puts the assets into the foundation. You have your council members, as we mentioned, who are controlling the foundations based on the powers given in the charter. And then you have your qualified recipients, who are basically the beneficiaries. Beneficiaries are very important, who they are when it comes to your tax status. And then guardian. I didn't mention guardian before, but that's an optional role. In wealth planning, guardian is a very useful role because they can oversee the council members and what they're doing, and are they doing controlling and managing the foundations on behalf of the beneficiaries. When it comes to assets that can go into foundation, it can go from real estate companies, bonds. There is no restriction, like you mentioned, it can be international or local. Yeah, so I don't know if you want to add anything else here, Matt. I think from my side, that's enough on foundations.
Yeah, I think it's pretty detailed. I think one of the key things there is the guardian. Obviously, you have a council member similar to a board of a company. But most people I'm speaking with will have, let's say, the founder, maybe his wife, and maybe business partners or personal friends he may have business interests with. But he often will put someone, install maybe a family lawyer or someone who knows his situation and wishes, just to install that person there to oversee the board, to make sure that the founder's wishes and the foundation operates as per the directive, and it doesn't kind of veer away, or any circumstances change, or any sort of rash decisions happen perhaps. So it is an optional position to uptake with a guardian, but it is quite common that people want someone to be in there just to oversee everything and have a bit of a fail-safe in there.
One important thing that I would mention, and a lot of our clients do come with their family lawyers and advisors.
Yeah.
And we do also highlight always the importance that when it comes to drafting those charters for the foundation, we do provide a CSP model charters, but somebody who knows the family and who knows all the details and the dynamics should be drafting the specific authorities and specific clauses around the council members and how the foundation will function. Because we as CSP, yes, we can give you guidance. We know in general, we've seen a lot of cases, but we don't know. Majority, we don't know the details of the specific families throughout the years, and what is the wishes. Again, you have to go back. What do you intend to have in the future? What was the path? And what are the exact wishes of the family? So that's why if a family lawyer or somebody advisor that works for them for many years is involved in drafting these charters, is always better.
Yeah.
Okay, and we also mentioned when we said the top cause usually are foundation and family offices. Family offices are one of the also fastest growing structures in DIFC, and we've seen a lot of transition when it comes to family offices. I think especially from Asia and our offices there.
Yeah, so we obviously have quite a lot of track record with setting up these structures in Hong Kong and Singapore, and our colleagues in those offices have been kind of helpful with giving us some background and some kind of guidance on that. But since this has been launched in DIFC, we've seen a massive uptick as well of people wanting to potentially read on those family offices to the Middle East. Of course, it's a gateway between the East and the West. and DIFC has a great framework for that. So yeah, we've seen quite a lot of uptick on that for sure.
I think one of the features and kind of highlights of the family office here is that it's not regulated by the FSA. You have to comply with certain AML requirements and structural requirements, but it is not regulated and monitored by the DFSA. So still the registration of the family office and their operation is, I would say, a bit more simpler than in some other jurisdictions. There is a lot of tax advantages of having the family office in the UAE. And when it comes to setup criteria, it's quite simple. It can also serve like one or multiple families. You have single or multiple family offices. Family must hold a minimum of 50 million US dollars in aggregated net assets. For some families or some, it depends on your network, and but it's sounded a little bit high for the threshold. But I would say when comparing to other options, it is aligning in the market. ADGM as well, just to compare, started with 10 million as a requirement. Now also they changed 2 years ago for 30 million, so quite more aligned with the DIFC. So even that threshold is being lifted to align throughout the UAE. You need one shareholder and one director, but they don't have to be residents. And for example, in your ADGM, you have to have a resident authorized signatory.
Yeah.
In the DIFC, you can have your residency after the setup. So you can have a shareholder and a director who are not resident at the time of the setup. And share capital must be greater than 0. Of course, you decide your share capital in the constitutional document. I don't know if you want to mention anything else here, but yeah.
Yeah, I think one of the things I've seen as well is a lot of people that are re-domiciling their or considering DIFC as a jurisdiction, they are often having this above the foundation.
Yes.
So they'll have the family office at the top of the structure, then have their foundation that then rolls down into the bottom for their assets. And that's quite common because a lot of their net worth will be built from the assets they already hold. And they then want to structure everything from an efficiency standpoint to be underneath that family office. And then obviously have their business partners and their legal team kind of at part of that family office as also part of the council members for a foundation and their business interests as well.
Yeah. Thank you. And yeah, moving on, I think, oh yeah, that's something that is very interesting for me to kind of close off the analysis on the entity types. Yeah, I'm just using the word misconception a lot during this presentation, but there is that misconception that smaller companies and entrepreneurs don't have a chance in DIFC because most of the products are focused on the wealth planning, big financial banks and asset managers. So DIFC has done a great job actually to promote the wider ecosystem and to create awareness. But still, I think we need to do more as the partners of the DIFC. So to inform our clients, our own offices, our own introducers that DIFC attracts also firms of when it comes to across all stages, startups, growth stage firms, global enterprises, not just the big players. And when it comes to innovation and fintech hub, at the beginning when we had the diagram, there was also number of activities that can go under this. There are specific sectors that are identified as the key interests for the DIFC, and not just fintech and insurtech and regtech. When it comes to IT consultancy, platforms, technologies, cybersecurity, VR, gaming, AI, of course. These are all sectors, or if you fall in at least partially under this, that you can find maybe a space within the DIFC Innovation Hub or within the FinTech Hub. There is over 2,500. I also was impressed by that number of professionals working out of the DIFC Incubation Hub with over 800 startups. And FinTech Hive is also growing fast with 200 plus startups. And why are they having so much traction right now? I put a little bit of case study of one of our clients who is a female entrepreneur. She wanted to set up a software house technology, and we kind of after analyzing different options, she wanted to go into the DIFC innovation under the DIFC Innovation Hub because she could have the co-working space within DIFC, which is an amazing prime location. She can have all the benefits from common law legislation, attract investors, also be in contact with the other wider ecosystem and community. And all of that government costs was around approximately 10,000 dirhams for the startup. Of course, this is kind of an incubator sandbox. You get this reduced licensing fees across 4 years, but still, by that time, you expect it to grow out of, the startup stage. So you can have a very, very, very cost-effective solution within the highest level of operating regulator and legislation. So I think for me, highlighting the Innovation Hub and what they do will be also key personally going forward. So on my personal LinkedIn and wherever I speak, I will highlight the importance of these two new innovative, I would say sandbox, options in the DIFC.
I think you highlight a good point with the network as well, because you not only have people in that area, but also all the guys raising money who want to find the next startup. They're also going to be in DIFC. And obviously to connect with those guys from an infrastructure point of view.
Like this official, by the way, data from the DIFC. DIFC Innovative Hub has raised more than 19 billion. So
wow. Yeah. So just going into a quick case study here with a client of mine who I'm currently dealing with. So he was discussing having a foundation put together. So he has assets not only here in the UAE, but also globally. He travels a lot, but his sort of global base from a sort of business and taxation point of view is the UAE, and he wants to align everything. So, one of these common things is, okay, where do I start? Do I have a family office? Do I have a foundation? Do I have one SPV? Do I have 5 or 6? So typically, we go through this a lot with people and how we can help them. So, and the good thing as well is I was working not only with the client, but also his business lawyer. So he said, I want to have a structure. I need to have a CSP who's regulated, where we at Sovereign came in to do that registration, do the annual filings and such, but then his lawyer would take care of everything for him. So then we would send him the bylaws and charters and have everything set up. And it's really important that you have those people involved. And this is very typical client now is people that they're wealthy, they have assets across different lines, and wanting to put that together. So this is kind of where we're helping them. And then you have obviously a client, this the more corporate client who's put a structure together here as a physical location in DIFC.
Yeah, I think the team also, we wanted to actually highlight that it's not just all about private wealth, innovative startups. It's also, there's a huge retail sector in DIFC, and it works a bit differently because the requirements are different. But one of our recent cases was a new innovative fitness Pilates studio chain that came from Australia to the DIFC. Also, I'm in pink, so everything female. So I think all the examples that my team and myself put forward were more female entrepreneurs. So apologies to our male. It's October, so breast awareness month. So it can be all pink. So yeah, all female entrepreneurs came together. They have a very great chain in Australia. They wanted to also set up in DIFC. in general, it's set up as a normal limited liability company, but because it's a retail, considered a retail line in DIFC, they're very picky on who they approve, because there is also a lot of competition and all of that. So the setup process is a bit different. There are different guidelines. I think how we contributed to the clients is preparing with them from start to finish, when not just when it comes to compliance and onboarding documentation and structure, because they had a very complex structure on 10 plus individuals, more shareholders and all of that, but also on the business plan, because for any retail space that retail new business that comes into DIFC, there is a retail committee. So you need the client and the provider need to go in front of the committee with a presentation, business plan, and pitch basically for why in DIFC, the same as we said, so vice versa. And the idea and the branding. So we have worked with the clients to prepare that presentation, give them guidance. Of course, they know their business best. And that's what I always say to the clients, you know your business more than us. We are here to guide and help, but we can give input on what would approve and how better will be seen. So when it comes to the retail space, you will always need to go to that committee and pitch for why you need to be in DIFC, why is your brand important, what is innovative, what is your idea, and they're already up and running and operating now. So it is a success story here overall. Yeah, oh, we are at the end. A bit ahead of, I think 4 minutes ahead of the planned time. So hope we were not running through this, Bianca.
Too quickly, yeah, you guys know your stuff. There was a couple of things that weren't really questions, more statements, so I'll address those first. Alexander's asking if the presentation will be shared. Yes, the presentation and the video will be shared. David, you asked about us sending over separately some biotech fund requirements. So Matt will get in touch with you separately for those requirements. Yes, no problem. There's questions coming from a couple of different places, so bear with me. The first one was, can foundations be exempt from corporate tax?
Yeah.
Wonderful question. So the answer is yes, they can be, but they do need to be registered and structured correctly, which we can guide on, but we often would engage with a third-party firm to work in alignment with ourselves to make sure that it is registered correctly. It can be done, and also it can have flow through as well. So if you have, let's say, a foundation at the top and then a master SPV that is wholly owned by a foundation, you can apply for an exemption through that. But then again, full disclosure, I'm not a tax person, but it can be done, and we can help you on that journey for doing that. Yes.
Yeah, and to just give a bit more detail, and this is again, like Matt said, we'll give caveat. This is not by any means a legal tax advice, but in theory and in general, so after you have your CT registration, you can go back to the FDA and apply to be treated as something called fiscal transparent entity. So when it comes to from the tax purpose perspective, you would be an unincorporated partnership. So in order for you to qualify for this fiscal transparent entity status, there are a couple of qualifying criteria. I'll just kind of mention them in general. So if you remember when I said beneficiaries are very important from tax perspective, so your beneficiaries need to be natural persons if you want to have the status, so individuals. The legislation allows you to have even a trust as a beneficiary or a corporate. It doesn't have to be an individual person, but if you have other structures as your beneficiary, you probably will not be able to qualify. I'm not going to say dismissively no, but like you get the point. Then when it comes to your principal activities, they should be holding, receiving, investing, and managing, right? So asset funds, that should be your primarily purpose of the activity. So, and the third, you should have no business activities. So no operational activities. And the fourth one, many of us think, oh yeah, that's understood, right? But your main purpose must not be corporate tax evasion. So from how you are structured, it shouldn't be obvious or shouldn't be clear that your purpose for all of this structuring was for you to qualify as the fiscal transparent entity and not to pay taxes. So these are the four cores. And of course, every scenario and every case is individual when it comes to taxes. You can get a bit more detailed opinion on this, but for the purposes of this presentation, I think giving a bit more content on how and why, yeah, I believe in that. So yeah, I hope this is helpful, whoever asked the question.
Okay, there's loads more questions, so we'll try and get through as many as possible. Galina's asking about, so if the founder, this is for foundations as well, if the founder is an entity, will the UBO of that entity be reflected in the register or the entity? That's the first part of the question.
Yeah, so as I mentioned, one of the key features of the foundation is the privacy. So the family and the UBO is not on public register, okay? So it's many, but not on the public register in the IFC. We have internally created a very interesting, and I see the sentiment is foundations again. So we have created some comparison charts on UAE foundations and highlights. So whoever is interested in foundation specifically or has a case, please shout out to Bianca, and we will write, and we can send individually the comparison charts for foundation, including the DIFC and the features.
Sure, I'll add a comment that people can like, and I can base it off of that. But then there's a second part to this question as well. If the entity then is then liquidated after the setup of the foundation, will the UBO of the entity be reflected in the register? So I guess
yeah, the register, but again, the liquidation documents don't refer to the UBO, it refers to the decision makers. But again, these are very specific on kind of where was it reflected. It shouldn't be, but again, I can reconfirm this with my team, who actually does process the liquidations directly. Unfortunately, when you kind of oversee the Middle East, you will touch on these small technical things that are day to day, but I'm sure my team can give you that answer.
I've made a note of that question, so we can take that offline. Himani's asking about, is it mandatory to hold assets in the UAE for SPVs to be formed through a registered agent?
No, not for the DIFC SPV. It can be anywhere in GCC. So that's one of the qualifying purposes. For so let's say if you fall under some other qualifying criteria, that is not the purpose. You can, for example, if you are a registered person in the IFC and you want to open an SPV and hold an asset in Monaco, you can. It doesn't have to be in the even GCC in UAE if you qualify under some different purpose. But if your qualifying criteria is the purpose one, the one holds asset in it has to be GCC, and because you don't qualify under any other purpose. I'm not sure if I'm being very clear on this, but yeah, hopefully.
Marvin's asking, what are the advantages or differences in setting up an operative company, not just a management office or a holding company, like an IT consultancy or company software in-house in the DIFC versus another free zone?
Okay, so when it comes to the specific IT consultancy software and all of that, you can actually form the company within the innovative hub, as I discussed. If you're comparing it based only on the price wise, it will be the same and competitive, but benefits are huge. Within the DIFC, if you remember, I mentioned that at the beginning, you are within home away from home. So the DIFC has their own courts, legislations, ecosystem, everything under common law, and with security and with certainty and with interactiveness for investors. So that means, let's say, for example, if you register your software IT company within DMCC, your what you do with your shareholders' agreements and with your shares or with distributions, or how you want to arrange certain clauses or between the shareholders is limited, because it has to be also based on the civil law. In the DIFC, you have a free range on how you have your internal agreements as shareholders, as controllers, and they are binding and enforceable by the DIFC courts. So that's the huge benefit. Plus, again, we know that DIFC as the financial free zone is attractive for any financial asset manager, institutional investors, because they have security on the structure that controls your business. I don't know if Matt, if you want to have this.
Yeah, I would say if you're into the IT sector, be that cybersecurity consultation, given that you have the discounted trade license fees and setup fees overall in the Innovation Hub and the FinTech Hub, that is quite an attractive option within DIFC itself. Obviously, given the benefits of having English common law as its overall legal framework and its own court system, and how they process things in DIFC is super efficient and super quick. So that's very attractive. Certainly, if you want to employ staff, having everything on a centralized portal makes things good from an employer point of view. You have the pension provision as well with DUES, the employment workman scheme they have here, which is an auto-enrollment pension plan. So if you want to bring staff from, let's say, the home country, like the UK or whatever, to here, you can then also offer them a pension benefit as well, which is great. So it's a good option for that.
Great. Marvin's also asked about DIFC tax benefits. Obviously, the guys mentioned we're not deep diving into tax too much, but can we top line highlight that? And then he also asked if golden visas, if you were to set up an IT consulting company, or can you still obtain a golden visa?
Yeah. So again, you can. There are a few little caveats and things to be aware of. So for a business, usually after 12 months of the company being operational, you can apply for a golden visa. You do need to earn a certain amount of money. So you have to have an employment contract that shows your base salary is at least 30,000 dirhams. The base component, it can be more than that, but the base component has to be at least 30,000 dirhams. You have to receive at least 6 months of that salary from that company in order to get it. But once you've done that and you have a attested degree and a skilled qualification, you can indeed apply for a golden visa as executive director.
I'll correct you on that. Not just a tested degree, equivalency certificate.
Yes, with an equivalency certificate as well. So that is now, it's only recently just come in, but it's now mandatory to have that. And it does take some time to acquire that. So I've recently done one for a lawyer that's taken 3 weeks, and that was a document issued from the UK. So we normally say it takes about a month to get that from the various different places. But it does need to be attested, and then also have a certificate as well.
I would just say as well because we are discussing this in the context of, I think, Martin, or who asked the question of an IT, probably smaller business.
Yeah.
The benefit also that almost no one will tell you this. Like in Dubai, there's when it comes to Dubai government and especially immigration here, that's much more flexible. If this was in Abu Dhabi and your company would need to have at least 25 employees to qualify for there is ways, but that's the general rule. They don't want to have small startups applying for golden visas. That's not the case in UAE. If you meet the criteria Matt mentioned, even if you're a smaller company that has been running the business for over 12 months, you can put forward an application for your employees for golden visa status. So that's, I think, even though it's not highlighted by, I think, I haven't heard providers highlighting this, but internally we discussed that because we operate between all Emirates, and my operations team sit in Abu Dhabi, in ADGM here. So we discuss these small things. And that's a huge thing. We have seen application being rejected because of that. And Dubai is much more flexible on that. They will not scrutinize you for being a small startup of 3 to 5 and not allow you to put forward your golden visa applications.
Yeah. There are a lot of terms and conditions, but so long as you meet them all, then you'd be fine. It just doesn't happen day one. There's a little bit of a misconception that have a company, have a salary, I can then do everything day one. But there is a certain waiting period and kind of you have to fulfill various criteria.
There's been a lot of change in the UAE, and I think a lot of people have stuck in the past.
Yeah.
So we need to change.
And they do change, and they do often change without notice, as well, just as another caveat. But yeah, we always try and help out as best we can and kind of guide you through that process. And we can obviously help you lodge that application with the team, the PRO team as well.
Okay, cool. David's asking about, does the DIFC permit segregated portfolio companies, SPC entities?
Well, that's kind of the shelf companies that are used in Guernsey and Jersey. Yes, there are regimes for that, but not like by like. If you I'm not sure if he's asking this question from, let's say, Jersey perspective and Guernsey perspective, but there is ways to do that with DIFC SPVs within their articles to have different classes, and if, let's say, some line of business flows through this class profits, if it's more for profits. So yes, that's why it's under the common law. So there is options how you can structure that with your legal advisors. But yeah, I would need to understand a bit more context from which perspective it's coming. But I would say the answer is yes, but we'll have to look into that.
And then, sorry, I'm just trying to find where I'm at. Himani's asking, does DIFC, no, sorry, Divyashram is asking if DIFC accommodate the setup for trusts.
Yes, they do. But it is not as popular as foundations. That's why it wasn't the focus. But yes, you can also set up a trust in DIFC. Mostly our clients, again, because we cover 8 other trust jurisdictions in sovereign, opt for trust in different jurisdictions, but it is possible in DIFC as well.
Yes, we don't have a trustee license in DIFC, but we do in other jurisdictions. So often we would use the foundation model here, but if they needed specific guidance or help setting up a trust in a different jurisdiction outside of the UAE, then we could obviously bring the resources in from other offices to help in alignment with ourselves here to do that.
Great. I've got a couple more people asking specifically for requirements on particular business types. So we'll reach out to you guys separately about those. Marvin, again, popping up with another question about license fees in the Innovation Hub are discounted for a certain number of years. Is that correct?
Yes,
correct. 4 years. Okay.
So 3 to 4, like they're changing it, but yeah, will come. Like I think it was started as 4. Now I think it's 3, but yeah, it depends on the applicant as well.
And then he's asking for a breakdown of fees, but I guess that will be completely specific to what you plan to do. So Matt can follow up with you.
For the breakdown of fees, it does depend on the license activity. However, if you're looking for what year 1, year 2, year 3 is, because it does ramp up, I can send that information over because it is given from DIFC, so I can share that with you. It's publicly available.
Great. I'm just seeing, sorry, Simon, I hope you're ready because you requested to put your, I'm going to let you speak to the team to ask your questions because you had 3 questions there. So.
And you have 3 minutes for 3 questions.
Yeah, exactly. Simon, if you unmute, we should be able to hear you.
Yep. Hi, hello, everybody. Good to see you all. Great turnout. The qualification for the passive DIFC entity, if the shareholder secures an Emirati residency visa, I'm sure that's the qualification criteria for that person, that client, to become a manager of the company and a member of the board. Is that correct?
Not exactly. I can see where you are coming from and how that could be a perception, but when it comes to ownership or control criteria, you would qualify only if you are a GCC person. That means a national,
beg your pardon,
not a resident.
Okay.
So there is always this misconception, even when there are certain advice, it has to be a GCC national or a registered person. For example, your client has already operating co in the DIFC. That operating co can qualify to open an SPV without any other criteria, the same as authorized firm, asset management firm, for example, can open as many SPVs as they can, or a fund. I think there was a fund question before. So if you have a registered fund in the DIFC, you can open other vehicles. Again, the fund anyway starts with the SPV that converts to a fund. Yeah, so that could be.
So if
like
you
that.
don't have that, how does can Sovereign provide the GCC manager?
No, but there is the fourth qualifying criteria when it comes to the CSP route, where we, as the CSP DIFC licensed employee, can act as a director or handle AML and compliance. But again, it's not a very popular one, and it's very controlled. I would say we control it as well from risk perspective. But the most common ones, Simon, are, you know, you want to buy a property in UAE or in Saudi as well, or Qatar. Or you want to own shares, even in Qatar, you can do it with your DIFC SPV. And I would say here, a lot of clients have asked us, but when we intend to, we don't own it now. Yeah, that intent needs to be presented in the business plan. That's how you comply. And of course, then you have a certain, you know, month that to provide the proof of evidence that that has been done, that you have actually purchased these shares. So you will say, okay, the purpose is to buy shares in so and so company, or to incorporate a company in Qatar, or can be UAE. I'm using more Qatar, Bahrain, or all that's because I don't want to have the misperception that it's only UAE.
Okay. And lastly, I imagine the SPV, although it's got to be passive and it can't hire employees, it can still own underlying subsidiaries, receive dividends. Can it also own IP and receive royalties and make loans and receive interest? Last question.
Yes, correct. When it comes to just loans receiving interest, that it's very important that you structure that right with your accounting and tax, even how that flows.
TTA
but yeah,
planning,
that's correct. It can do all of that. As I mentioned, I think I mentioned in one of the diagrams, generally speaking, always you want to segregate your IP from the other asset ownership, but it can be also owned by one SPV. There is no restrictions on that.
Incidentally, the Indian Premier League cricketers, the professionals, have their IP located in DIFC and those sort of companies. So that's pretty special. And
thank you for that information.
Why not? Thank you.
Well, we should go into Bollywood as well then.
Okay, so very informative, guys. Thank you very much. If we didn't manage to get round to your question, both of the team's email addresses are right there on the screen. So please feel free to reach out to them directly or via the invitation that you received from us. Yeah, we hope you found the session to be informative, and maybe the next one will need to be a tax specific one on DIFC, because I think there was a couple of tax questions. So thank you, Matt. Thank you, Zana. And yeah, speak to you all soon.
Thank you, everyone, for joining.
Thanks, guys.